Friends, in this video, I am going to talk to you on the topic going defensive. When should an investor think of going defensive in his portfolio? When should you avoid buying fresh ideas? When should you be careful about the valuation you pay to invest in a new idea? When should caution be your watchword? And when should you reduce your aggression? Typically, everybody knows the answer to all these questions. Everybody knows that when the valuations are not comfortable, when markets seem to be over exuberant, when everybody wants to only buy, when selling goes down, when all the good news gets factored into the stock price, when you're not excited by the valuation of most companies, then all these factors must make you think that it's time to be going defensive. But in reality, when do people actually start going defensive? When selling is unabated, when stock prices fall off a cliff, when it appears that there is no respite in the decline in stock prices, and when nobody else wants to buy. So you look around, look for all the evidence that others are not buying, and then you decide not to buy. Common sense tells you that that's the time when you should be looking to actively buy. Likewise, common sense should tell you around market tops or very close to the top that you should be going defensive. Is this a time to be going defensive? I certainly think so. I know a lot of people are also putting forward a theory that when everybody goes defensive, the market will probably go higher. Probably they are right. But if the market goes further than where it is today, if it goes higher than where it is today, you probably must become more defensive. It is not a mistake to be a safe player at an early stage. It is not wrong. I know many people who fight with me saying that, oh, you said that one should be careful in the market when the market was some 5% lower. It's not a mistake. It's an attitude, it's an approach, it's a behavioral inclination towards playing safe. And what happens? You at least slow yourself down. Nah? You don't buy like a maniac. You don't chase new ideas like there is no tomorrow. Your FOMO keeps coming down. As the market goes into a expensive zone, you need to mentally get into a safer zone. And how can you do it? You can do it only if you're going defensive. And how can you go defensive? It's only by starting early. But a lot of people question this. I'll just respect their right to question, but this is what I believe is a sensible thing to do. So, is this an early time to be going defensive? I think not. Is it a very late time to go defensive? I don't think so either. It's difficult to predict when it is late, and I don't think it's an early time. So, I think that a balanced approach is what is warranted. You know you're not able to find too many attractive ideas around you. You know the valuations are not looking too tempting or compelling. Under such circumstances, you know what you need to do, which is you need to be going defensive. Now, how aggressively you must go defensive is a personal choice. Some people may want to ride the last 5% of a bull market. Some people may want to take the last juice out of an idea, so they don't want to sell it till the top. Not that I know how to find the top of a stock, but they think they know. So, those with such expectations out of themselves can live by those expectations, no problem. But those of you who know how to be realistic and who know that you cannot exactly catch a top or get the full juice out of an idea, will leave some juice for the buyer, will allow some upside for the person taking the risk at this point in time, and you will take your money back to safety. You will walk your money to a safer place. That would be a sensible thing to do right now. So a beginning must be made. The pace is at your convenience. But start now, start going defensive and become more defensive if the market becomes more irrational. By having a defensive stance, now what do? You avoid making mistakes around the market top. What else do? You avoid overpaying for even good ideas. And importantly, you think of selling a few ideas which you may not want to own for a very long time. As a consequence, you end up raising your cash levels so that you can buy if there is a dip. If you have leverage, you reduce your leverage, you pay down your leverage. If you are into futures and options, you reduce your positions there. You try to hedge your positions by creating some defensive positions in that area as well. You hedge. Effectively, you start and move in a direction which is very defensive and which will become more defensive when you see more exuberance around you. What I am asking you to do is to just make a beginning, and it's not a very unreasonable or a difficult task. Thank you for watching this video.